I think it's going to be some time before we see clarity for a number of reasons. First, just the process of the UK exiting the EU. The referendum was advisory only, it wasn't a decision. The process only starts when the UK government makes a decision and then notifies the European Union of that decision. And we've heard from the Prime Minister that's not going to be before the end of this year. The European Union has said it's not going to enter into at least formal negotiations before the Article 50 notice is served. Inevitably, informal discussions are happening already and will continue to do so.
Yes, indeed. I think it will be years before there's clarity. It's quite likely, possible, I would say, that the UK will have formally exited, say 2.5 years from now, without there being clarity about a long-term deal. That some interim deal is concocted, some form of associate membership, which involves very uncomfortable, non-sustainable compromises, but while the negotiations with the EU 27 are proceeding.
And there are a number of models that have been talked about. There's been the so-called Norwegian or EEA model, under which the UK effectively retains all the benefits of the single market, but has to continue to pay into the budget and also has to allow free movement of people, but gets no say at all in legislation that comes from Brussels. So to my mind, that's the worst of all worlds, and I think politically that's just off the table. A second option is going to be some sort of bilaterally negotiated special agreement or treaty. The EU has those with Switzerland, has them with Canada, it has a version of it with South Korea, I think. That is going to be extremely complicated. It's going to take time to negotiate. And again, it's hard to see how the UK can get sort of effective access to a single market for trade or services without having to agree some form of free movement of people, probably beyond what the Brexiteers wanted before the referendum. And so the third model, or type of model, is where there's no particular agreement negotiated between the UK and the EU, and you're left to fall back on the WTO model, which doesn't take you very far at all.
In the financial sector, of course, no matter how tough the deal is, if they don't get full access to the single market, passporting and all that, in the financial sector, Britain can, if necessary, set itself up as an offshore tax and regulatory haven and compete aggressively for things that they're not doing at the moment. Even if they lose, say, trading of euro derivatives to assorted euro area ports, they could attract new business. It's the non-financial services, exportable and import competing sectors in the UK that I think are going to be much harder hit, because they can't in some ways arbitrage themselves into a better competitive position. The City of London, I think, will change, especially if they don't get full access and passporting. But it will, I think, survive quite healthily. It's the rest of the economy, I think, that's going to take a harder hit.
I think another interesting thing is how business confidence has played out. Before the referendum, a lot of companies were predicting doom and gloom and saying they would cease investments in the UK, they'd move people to continental Europe. But we've seen a number of interesting things happen since the referendum. I think in deal terms, we as a law firm thought that deals that were in train would complete and companies wouldn't seek to invoke material adverse change clauses, for example. But we didn't think there'll be many of the very large deals we've seen over the last couple of years. But that's been proven wrong. So it seems to me that business confidence is increasing as well. Now things have calmed down a bit.
I don't quite share that view. I think clearly this is not, whichever way it works out, it's not going to be the end of the world for Britain. But this is a hit to the international trading environment of the UK. Even in those areas where the weakness of sterling, which is one of the automatic financial stabilizers that fortunately worked. I'd like to see more of it, but that depends on the Bank of England getting its act together. But the improved competitiveness of the UK economy will help, but it is a mitigating factor. I think fewer deals will be done than we otherwise have done. been done, and less capital expenditure will take place, not just in the business sector, but in construction, residential and commercial. The overall currency impact, safe haven flows into the dollar and into the yen, but it was really quite minor. I think there is clearly no perception yet that UK exit could trigger a breakup of the euro. If that had been the case, then the euro would have weakened significantly, maybe not relative to the pound, but relative to the other currencies, and that hasn't happened. So there's still this belief, I think, at least as seen by the market, this is an isolated phenomenon, that this is not the beginning of the end for the European Union. The return to capex, right, are going to be lower, at least for a long transitional period, until the new trading arrangements are in place. I think the financial stability and availability of funds part of the crisis has been handled extremely well. The Bank of England made it clear already before the Brexit vote, through these what they called indexed long-term repo operations, that they would make sure that no systemically important entity, financial or real economy, would find itself in a financial crunch. The Bank of England has clearly been holding hands with the Fed, the ECB, the Bank of Japan, probably the Swiss National Bank, through swap lines and other forms of contingent credit lines, to ensure that foreign exchange of whatever currency denomination would be available. So there's no shortage, if you want, of funding. If the opportunities for profitable investment are there, then funding will be available.
I think one thing that surprised us has been the capital markets seem to be open, remained open as well. I think our capital markets guys thought they'd take an early summer holiday after the referendum, but activity has been very high, both ECM and DCM. Bank funding's been available, and as I've said, there's quite a lot of deal activity as well. Now, how much of that is opportunistic based on the currency? How much of it is genuine? Too early to tell.
Even if it's opportunistic, right? The markets are there, it's functioning, funds are available. So there's no financial dysfunctionality as a result of this.